There he is, Dr. Doom. Marc Faber is a Swiss investor. Faber is publisher of Gloom, Boom, and Doom Report and is the director of Marc Faber Limited, which acts as an investment advisor and funds manager. He's 66. He was born in Zurich. He got his PhD in Zurich. He's like Jim Rogers, Peter Schiff, Nouriel Roubini, Gerald Celente, and Doug Casey. I never heard of Mr. Casey. Okay, let's go to Peter Schiff interviews. What's this thing called? Interviews Marc Faber on what will happen in 2013 CNBC. Actually, that's somewhat erroneous because Faber and Schiff talked about 2 minutes. Okay, what is Faber predicting for 2013 according to this chart? Stocks peak, then decline about 20%. Bonds rebound but close the year lower. Japan, Vietnam, and China stocks outperform. Gold closes the year higher. All right, he had indicated that he thinks that earnings will disappoint. And he thinks that people are going to giving up on bonds because they'll understand that the sovereigns are not that sovereign. He also swiped at Mr. Bernanke and Mr. Obama. He said he's never going to believe in the stock market as long as there are people like Ben Bernanke and Barack Hussein Obama. And Ben Shalom Bernanke, I guess I'll say them both. Hey, those are my leaders, buddy. I know you're a big shot and you're 66 and you manage billions and trillions of dollars, but hey, those are my leaders, buddy. Japan, Vietnam. So I don't know. If you wanted to buy some ETFs, then that's fine. I like JOF from Mr. Bollinger. We'll look at that in a minute. Gold closes the year higher. Peter Schiff has said, buy gold, buy gold, buy gold, buy gold, buy gold, buy gold. Mr. Faber is not that way. He just says he buys it every month. He just buys some every month. All right. The thing that I wanted to point out is he said that a lot of the big stocks, and he mentioned Walmart. Where's Walmart? It's down here. Here's Walmart. Walmart was weak. Walmart peaked at 77 back in October, and it's down to 69. So it's down 10% off its highs. And it's got some sellers. And there it's bottomed. It's a PPO on the weekly. That goes back a ways. That goes back to 2010. Quite a long chart. Well, here it is down here. Here it is up here. So if you'd have bought $100, if you'd have bought $50 back here, back in 2010, early 2010, January 2010, you bought $50 worth, it'd be worth $70 now. I don't think I'd whine about that. That don't seem that bad. Okay, let's look at all of them. These are the Dow stocks. These are the people that really matter. This is the big money. Alcoa looks good. American Express hitting an all-time high. It looks like, yeah, it's blowing out. Boeing, another one, high. Bank of America, the Bank of America. Yeah, it's strong. Yeah, the RSI is dropping. Looks like it might go into some weakness. Caterpillar. Yeah, it's kind of a dog. They pay a nice dividend. I'd look at them if I was a real stock buyer. Cisco. Wow. Look at Cisco. Strong. Chevron. Down a little bit. Coming back. DuPont. They make real stuff. Look at that. Yeah, that's bad. That don't look so good. Disney. Good old Walt Disney. He was a Nazi, I think. Anyway, they look strong. GE. Yeah, that's Mr. Jack Welch's company. He's fired more people than Romney did. That don't look too bad. Home Depot, or we call them Depot. That's stronger than Mule's Breath. Hewlett Packard, it's down. IBM, strong. Intel, strong. I made money on Intel years ago. Johnson & Johnson, that was the one that went down 1,000 points in one day. That one where the whole stock market dropped. Yeah, that looks strong. JP Morgan, strong. Coca-Cola, McDonald's. They're not so strong. So yeah, I don't. There's Microsoft. That don't look so bad. Mr. Gates. Mr. Gates is still rich. All right. Travelers, good old insurance company. United Health. There's a United Technology. Jeez. Let's look at that one. Verizon. There's Walmart. And there's ExxonMobil. ExxonMobil, I don't guess you guys are surprised. Let's go 3 years. ExxonMobil, look. If you'd have bought them 3 years ago, you'd have paid $60 for them. You'd have $95 now. That's pretty damn good. Now, he also said that he would sell Apple rather than buy it. Apple, look up here. You got an M. You got a real ugly M here. M as in Mary, and Mary is not good. This is Bloody Mary. In other words, you're bloody. You're going to lose your tail here. Yeah, this is not looking too good. This is up. This is up. So you got a McCad showing up. I would buy it rather than sell it. I don't agree with Mr. Faber. He said he'd rather sell. I say I'd buy it over selling. Of course, I'm not Marc Faber. He knows what he's doing. I don't. Okay, let's look at the S&P. There we go. Yeah, I say the S&P is going up, but all these things can happen. I mean, it is early. A lot can happen between now and December 31, 2013. Because it's the 13th. So that means we got 18 days left in this month, and we got 11 months. So that's 11 times 30, that's 300. Yeah, we got like 320 days, probably about almost 300 trading days. A lot can happen. So anyway, I want to show you one thing. See how these guys look. Oh yeah. This is a stock that Mr. John Bollinger liked years ago. And it's called the Japanese Small Market Capitalist. Look at it. It is down. So if you want something that's relatively down, and this is a mutual fund, they will pay you dividends. This is a basket of many stocks that they bought a long time ago. So if you like stocks that are down, they're down. Look here. Let's go in a little bit closer. Let's go in a little closer. Let's go back. Just go back. Let's look at 6 months. Yeah. Yeah, it's up. I mean, sure, I would have rather bought it here, but now you know. Yeah. Yeah, that looks good. That looks like a winner. Let's look at the EWJ, which is the... Yeah, look at there. Yeah, it's already out of resistance. Let's look at this for 3 years back. Yeah, same thing. Same thing. Now, I don't know. That is awfully ugly. That is awfully ugly. Yeah, it's ugly. Ugly, ugly, ugly. All right. Okay. That's all I got for today. Bye-bye.